Hello traders, Gary Wagner here. It is 11:30 in Honolulu, 5:30 in New York on Monday, 30th day of June, 2025, and this is the evening report for gold and silver. Gold staged a notable recovery today, climbing over $30 and posting a gain of just over 1 full percent. This the combination of dollar weakness as well as bullish market sentiment by investors. After declining by $98.30 last week, today gold had a significant gain of $28.90. That is an advance of 0.88%, taking the most active August futures contract to $3,315. Gains in gold today were the net result of traders bidding the precious yellow metal higher and dollar weakness accounting for the majority of today's gains, with the dollar declining by 0.51%, taking the index to 96.776. This is the lowest point that the dollar has been to since March of 2022. Today's gains could be extremely significant and, most importantly, could be signaling a pivot from bearish to bullish. The potential pivot is a result of a number of indicators overlapping at the same time. First, when we look at the price decline, which began on the 16th of July, with gold around $3,470 down to today's low that came in just above $3,250, it created what is called a piercing line. Piercing line is a simple two-day pattern. It occurs after a defined downtrend where the green candle, meaning today's candle, has an open at or below the opening price of the prior trading session, in this case Friday, and closes at or above the midpoint of Friday's red candle. Because a piercing line is a simple two candlestick pattern, it does require a confirming candle, meaning on a daily chart, tomorrow's candle, which is beginning to form now, would need to be a large green candle with a higher low and higher high than today's green candle, confirming the validity of the piercing line and triggering or issuing a buy signal. Additionally, there are other technical studies and indicators that gives strength to the piercing line. First, the fact that the real body of Friday's as well as today's candle is well above the intraday low on both days. Secondly, the low that occurred today occurred at $3,255, roughly the 61.8% Fibonacci retracement from this rally beginning in the middle of May and concluding in the middle of June. Lastly, when we look at the stochastic oscillator, we can see in the middle of May, gold was oversold, but moved into an overbought scenario by the beginning of June. And then as gold began to decline, so did the stochastic oscillator. Recently, the oscillator broke below 24 and the percent K crossed above the percent D, confirming the strength and signal of the piercing line. About an hour and 15 minutes ago, gold reopened for trading in Australia for Tuesday's trading session. Gold is up approximately $7 from the close in New York, taking August gold to $3,300 and $2,300 per ounce. Based upon the technical studies that we have presented and the current rise in gold from today's low to its current pricing, to initiate long positions in August gold at the market, gold is currently trading at roughly $3,323 to $24 per ounce. We are recommending that you place your stop just under $3,300 at $3,298 is a good till canceled protective stop. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next evening report. Bye-bye.